Are we on the precipice of a total market collapse? Evergrande, the largest real estate developer in China with over $200 billion worth of debt, just announced that they will not be able to make their upcoming interest payment. Why is this important? Well, it's eerily similar to in 2008 when Lehman Brothers shut their door, which kicked off the entire credit crunch. Could this lead to the same effect? Well, let's have a look and see what might happen. All right, so let's look at what could happen if Evergrande falls. Let's see the cascading effect it could have. So if we have Evergrande here at the top, all right, so this is Evergrande right here. Now, if they fail, this will affect a lot of other parties. So first off, you have the debt, the interest they've said they won't be able to pay. Over $200 billion worth of debt that won't be paid. Now, that will obviously affect these lenders, right? We're talking over 100 banks in China and over 100 international banks that have lent money to Evergrande, who in that case will not get their money back. So that's the first big risk, that it could set off a banking crisis causing banks to go bankrupt, which obviously has a further effect. But this isn't the only place where Evergrande has borrowed money. They've lent from other sources as well. So they've lent money from investors. Over 70,000 investors have lent money to Evergrande using the bond market. Over 16% of the total bonds in China are from Evergrande, meaning if they fail to pay those back, if they collapse, there's a big risk that investors won't want to lend money using the bond market to Chinese companies, meaning other Chinese companies will have a harder time borrowing money, which obviously will affect their chances to grow. And the Chinese economy has already been slowing down over the last couple of years compared to the last decade before, where they have had massive growth. So if you also take away that liquidity opportunity, that opportunity to borrow money, this will put other businesses at risk as well. So that is the second part. The third part of this is home buyers. Evergrande has about 1.4 million homes that they have committed to building that aren't being built, meaning people have bought these homes. People have paid for these homes, and if they don't get completed, these people are without a home. They've spent money on this home, but they might not get it. So that is a huge risk. So what is Evergrande trying to do to fix this? Well, Evergrande is the largest property developer in China. Their issue is what we call liquidity problem, meaning they don't have cash right now. So they have to somehow figure out a way to generate this cash to pay back all these people so that they can build these homes, so they can earn all that money and save their company. That's what they're trying to do. So what do they have to do? Well, they have to sell property quickly, right? That's what they need to do. And how do you do that? Well, how do you get a lot of money in quickly if you're a property company? You start selling your properties, right? And to get the deals done quickly, you have to sell them cheap. So essentially, Evergrande might need to do a fire sale. They might have to sell everything, just get as much money in as possible so that they can work out with these other three constituents. But that will affect the whole Chinese real estate market. This will then affect other developers, and those developers might go bankrupt. And you have this whole cascade where even if Evergrande works it out then and can pay back these, if other developers are going bankrupt, well, banks will have those real estate companies owe money to the banks as well. And you have this cascade effect where the whole market can collapse. We've already seen the Chinese market starting to go down big time. Right? The US stock market has been affected. Even the cryptocurrency market has been affected. This has had effects all over the financial market, and the crash hasn't even happened yet. This is just fear that it could happen. And one of the big reasons why this is so very scary, it's not just the banks, it's sorry for my great handwriting. The Chinese property bubble. This has been talked about for the last couple of years, that China has been in a huge property bubble. Over 40% of household assets are property in China, meaning prices have been going up and up and up. And now if a fire sale starts that crash down, a lot of people could be hurt. This has been something people have been warning about for the last couple of years. And now with this setting off this cascade, we could have a serious credit crunch in China. And obviously, again, with international money coming into these Chinese companies, that will then have a potential effect on the overall global economy. This is where the risk is. This is why people are getting nervous. This is why people are scared of what might happen. We might be coming into a crash. Now, what do we do as investors? Well, we got to be smart about it. We're going to keep a close eye on this story. So make sure you subscribe to the Momentum Property Education channel here so that as this story breaks, as new information comes out, we'll keep you updated. We'll let you know what's going on so that you don't miss a thing. If it turns out that we got a new 2008 coming, if we get a total market collapse, we want to be buying, right? That is the best time to buy. As Warren Buffett always said, be fearful when other people are greedy. Be greedy when other people are fearful. People will be fearful when the market collapses. As he says, when there's blood in the streets, right? Just make sure it's not your blood. That's why we're trying to get this out to you as quickly as possible so you can make sure to structure yourself in a way that if the market collapses, you don't go down with it. Instead, you got to be ready to potentially go in and buy and get some really, really good deals. As I said, we're going to keep you updated. We're going to stay on this story, so make sure you're subscribed. You don't want to miss this. This is important. Thank you so much for joining us here today, and I'll see you soon.